Right. Welcome to the first trade breakdown in this new revamped series where I thought I'd spend a little bit more effort, a little bit more time going over the trades that I deem worthy enough to be recapped and shared with you guys on this YouTube channel. These are all trades that I have somewhat shared analysis with in AO and that I find valuable enough to also share in conjunction with the theory that I'm also teaching you guys publicly in the YouTube channel. So before we go into anything, I need to make sure that everything that I say here is not considered to be considered as financial advice. I've made sure that the disclaimer is also very much present. That's just kind of standard protocol. So overall, you may have already been familiar with this trade and the result of this trade. This is kind of where you see that I've shared it in the Discord with all my students as well. This was the first good AO trade that I shared in terms of setup and everything really being spot on. The first actual textbook trade that I thought would be very worthy of shooting. So let me walk you through it with the liquidity terminology that I've been feeding you guys as well, kind of making sure that at the date of these recordings and at the date that I send out these recap videos, that they fall in line with only the theory that I've covered so far, right? Not going into too many details that I believe are noise and should be filtered. So yeah, let's go straight into it. Kind of starting off from the daily time frame, right? That's going to be the most important aspect of this. What we knew, and when it comes to liquidity concepts as well, is that we can see one of two things, right? We can see that bearish arrays are being created, sell-side liquidity is being taken out. We can see a little bit of fine-tunement here, right? You can see that there is buy side trying to transact higher, failing to do so, and we actually create this triple liquidity grab in that sense. Where we notice that price then transacts higher, taps the midpoint of that imbalance as well, which is required for price to go lower, which is required for price to take out this sell-side liquidity, right, which was stagnant there. So we're running into an area where price already took out these two lows right there, left behind an imbalance, so it showcased intent to move lower. This entails that we also know that there's going to be passive liquidity lying below these lows. That entails that we take this active liquidity from this imbalance, so potentially injecting new liquidity to transact lower and distribute into pretty much all the passive liquidity that is lying below these lows. So we're putting one and two together, right? What can we conclude here is that we have a very prominent body close below this sell-side liquidity, right? Price comes back, but there's no real arrays for price to come back to. So that's also a very good tip, that if you're looking at the daily time frame, it is very important to notice that sometimes there will be these moves to the downside, in this case taking out sell-side liquidity, and you will realize that there's not really an area for price to really go back into or to seek new liquidity after taking out passive liquidity. So that kind of entails that one of two things can happen. Either it will continue plummeting lower, creating new bearish arrays that price could react from, or what you will notice is that price will then reverse and start building up bullish argumentations in this case, right? The only things that we can conclude here is pretty much this, right? In this move where price created intent to go lower, we created imbalance. Price obviously induces that imbalance, trades above it, and closes with a body close above that imbalance. We then also create this slither of pretty much a BPR that you can kind of pull out through all these three areas right here, which is great. Totally not wrong to think that, but you can see that price transacts above it, closes below, which is cool, This is cool to understand, right? So all these intricacies that you want to be doing are very, very important. The moment that you start doing these and really noting everything in your technical analysis, you will become a lot more in sync with price action. So we've got this BPR above. This BPR above came pretty much from this sell side move, but what do we notice is that there's a body close above that interim sell side liquidity. This leads to a new liquidity grab, right? So we're trying to confirm this liquidity grab, which eventually has been confirmed by this bullish imbalance being left behind. And now there's not really anything aside from this BPR that price could trade into, which it did. It transacted above this BPR. Now what we can conclude is that we will be going buy side. Hopefully all of that information was somewhat digestible. If not, take it easy. Go back, rewind the video, and see if you can follow it bit by bit, right? And from there, we'll go into different time frames. So H1, right, was pretty clear as well. From my understanding, what we were looking at, you can see exactly how price did this. So when we look at H1, this is kind of our middleman time frame. The reason for that being is because it acts as a very nice filter between your feel state, which is what we like to call it in AO, which is your higher time frames, your weekly, your monthly, and your daily, acting as your filter into your flow state. Flow state is your H4, H1, and then everything below H1 will become your flux, which is your execution time frame, right? That's kind of the fractal as to how we go about with trading liquidity concepts and price action that we see there. So you can kind of see one of two things already. If we were to overlap the daily, right, with just what we have on the H1, you will notice that this BPR was quite frisky. You can see that price actually, and that's very, very interesting. This is a hidden gem, right? BPRs on higher time frames often enough will be these collection phases that we talked about, right? Price collects right here. You can see liquid price action, and then price displaces, finds fulfillment, and then collects again, and then finds and displaces again, right? Which is pretty interesting to see that in these balanced price ranges, to no surprise, price actually collects and will accumulate orders, will transact, it will build up that pressure that it will need to either sides. In this case, more likely buy side. Why? Because we actually left inefficiencies here. We actually left an imbalance there. So price couldn't efficiently transact lower. We actually needed to transact into that area after having collected enough fuel to do so, which was at that daily level, which we talked about here. So closing, body close above that, which is very nice to see. So don't try to overcomplicate it. Just let these time frames flow with each other. Really start looking at these fractals effortlessly. You start looking at how does your daily look like on H1, your H1 look like on daily, vice versa. Start trying to see in between the candles. Might sound super vague, but you get what I mean. If you're long enough on the H1 and you've got enough experience, you can understand that obviously 24 of these candles will represent what your daily candle looks like, but you can also understand which part of your daily candle, just using your crosshair like this, will be that side which shows, let's say, bullish momentum on the daily, right? Which we were looking here. You can see that that imbalance came from this little area right here, from pretty much here, right, where we can see Monday the 13th into all of Tuesday right here. You can see that that's going to be that overlap, right? And it's just these small little things that if you are a little bit more experienced, you will get the gist of that a lot quicker. But it's definitely something that I can recommend you to do. So we go into the M15, right? And the M15 kind of portrays where we want to partake, right? So all of this occurred right before. So the main goal here, if we were to select pretty much where we wanted to enter, which was here, you can already see the result, right? Already showed you the result at the beginning of this video. If we go back to H1, you will see that it is quite evident and obvious that we wanted to take out all of this buy-sell liquidity here, and pretty much just take out this main level, all of this liquid price action that was building up from that first week of January, which tends to be this very, very slow week. Obviously, volume still needing to come into the market. So very, very slow price action, kind of that illiquid volatility, lack of volume that could cause some sort of volatile moves like we saw on the Wednesday the week prior, due to just there being less density in the market, less opposing liquidity. Whereas here it was very obvious what the target was, right? Our drawn liquidity was quite evident and we wanted to trade into that level. So that was very, very clear, right? Key thing to note here, always standard bread and butter play is pretty much when we have some sort of higher time frame, in this case flow, some higher time frame array backing our decision making. Here it was a bit iffy. You will see exactly why, right? Because we've got this H1 imbalance, which we actually already tapped in Asia. Not the most ideal, midpoint as well, right? So what we're actually trying to hope for here, which is a very, very ambiguous word to use in trading, which I don't recommend, is to see if there's some sort of actual second reaction, some sort of feedback actually off of this first injection to the upside, right? So the moment that we go to M15, you can see that that kind of becomes the case, that we are reacting to this midpoint, no real follow through just yet, reacting off of the distal line, right, of this, not a real follow through just yet. And then once we go to M15, you can see kind of what we're aiming for. So this was the setup, right? If I just kind of stretch my screen out, you can see that this was the setup that I sent. I played a little bit aggressive as well, on just stops below this. Regardless, both market shifts here were valid. Why? Because they both brought price lower. But you can see that what we wanted to play upon was actually this active move here, and to see if there was some sort of reaction from this, right? And then there were a couple guys that got in later, that got in here, and then played it. And then obviously this was right before the first CPI of the year. So you know what happens there. And I personally played it super safe. I didn't let this one fly. But there are a couple guys that did let this fly. Overall, the trade result here on one account was just a very clean 2.43 risk to reward, right? Which was quite nifty to start the year off of. And you can see here, seeing if this is worth a shot as we speak, we'll be aggressively managing the position as we are close to the reversal time of the session in 18 minutes. So that was right here. You could see that price created this feedback, so showcasing bullish intent. It came very late in that leg, right? And that was kind of my first red flag in this trade on the 15-minute. I didn't even jump into M5 or anything offbeat on M3, but you can see that right at the end of this leg, we created intent, which wasn't really what I wanted to see. More likely, this was some sort of absorption that was happening in this bearish order block that had no follow through, right? Because otherwise, that would be where our invalidation point would be. But overall, quite clear. And aside from that, you can see that we actually created new bearish arrays, respected them, which wasn't all too nice, which was my main reason to shut down most of my positions on break even here, and having just high risk to play this release, which was cool. Other than that, you can see just how accurate everything else was, which was very, very nice to see. Both of these MS market shifts were valid, right? Because both of them actually trade through passive liquidity. So this one through Asia low into this M15 array. And this one actually creates a new swing point, which respects bearish imbalance here and then goes lower. We see an LQG here, liquidity grab, and we see another one below there as well. So all in all, M15 did the job here. I hope that this is a lot more of better understanding in conjunction with the terminology that I've been explaining to you guys as well, with all the liquidity concepts so far, the 4 videos on liquidity that I have showcased you guys on this channel, and that you can see exactly how that theory kind of comes into play, right? We're looking at that run on liquidity here, seeing how price reacts. There's no follow through. We let this bearish displacement right after this entire collection here hold its weight. We're not stepping into M5 early. And then from there you can see that we have these signatures right here that showcase bullish intent, such as the bullish imbalance, such as injection wicks, and obviously our double market shift, both of them being valid to then allow price to come back into this optimal trade entry. If you weren't sure where to take your position, where to take your entry, and either entering off of the imbalance, distal, midpoint, or proximal, midpoint, distal, or the order block itself, would have all sufficed for this trade to do what it had to do. I know there were also people that crammed out here. I didn't take any partials on the first position, none of that. So yeah, I hope that makes sense, and I look forward to showcasing you guys the next video.